At present, in the Indian mutual fund scene, four multi asset allocation funds are being offered as NFO by these fund houses: Bank of India Mutual Fund, HSBC Mutual Fund, Quantum Mutual Fund, and Mahindra Manulife Mutual Fund. It's very interesting to note that four different mutual funds are coming up with multi asset allocation fund at the same time. In this video, we'll look into what multi-asset allocation fund is and what the details are for all these four offerings. If you like content like this, please subscribe to WealthDB. Are you worried about inflation? Is inflation destroying your wealth? After all, inflation is known as a silent wealth destroyer. Investing smartly is the only way to grow your wealth. The question is, where do you invest? How do you need to invest? Where should you invest in order to get consistent return without losing your hard-earned money? Should you invest in equity fund? Well, equity is volatile. So, should you go and invest in debt? This is expected to be your defensive area. Or is gold a good investment option? There is always fixed deposit where there is guaranteed return, but the problem is that the return is low. So, as an investor, you should always look for relatively higher return on a consistent basis. Apart from this, there is another thing which is of concern. The different asset classes give different returns depending on the economic scenario. In this chart, you can see that there is not a single asset category which gave a consistent return year after year. The chart shows three different areas of investment: equity, bonds, and gold. It shows that in different times and in different years, one of these three gave the highest return and others gave low return. This chart has been taken from Quantum Mutual Fund document and the source is Bloomberg Research. Multiple asset classes has its pros as well as cons. Equity gives aggressive returns and it has a long-term growth prospect with high volatility. On the other hand, debt investment is defensive in nature. It invests in government security and money market instruments with low volatility. The third investment category is gold or commodity. It is essentially a hedging instrument and it provides downside protection to the investor. So, long-term investing calls for multiple asset allocation and hence multi-asset allocation fund is the answer to all this volatility and gives a consistent return to investors. As of now, there are four multi-asset allocation funds that are being offered through NFO. The first one is Bank of India Mutual Fund Multi-Asset Allocation Fund. Its NFO opens on 7th February and it closes on 21st of February 2024. The second one is HSBC Mutual Fund Multi-Asset Allocation Fund. This NFO opens on 8th of February and closes on 22nd of February 2024. The third one is coming from Quantum Mutual Fund called Quantum Multi-Asset Allocation Fund. Its NFO opens on 19th of February and it closes on 1st of March 2024. The last one is Mahindra Manulife Mutual Fund Multi-Asset Allocation Fund. Its NFO opens on 20th of February and closes on 5th of March 2024. Now, let's discuss about each of these NFOs separately and understand their investment objectives, their allocation strategy, and their benchmark. The first in this series is Bank of India Multi-Asset Allocation Fund. The fund allocation strategy is indicated in their SID. As per those documents, BOI Multi-Asset Allocation Fund is expected to keep their allocation limit in equity and equity-related derivative instruments to around 35 to 40%, where the minimum is 35% and the maximum is 40%. The allocation limit for debt and money market instrument will be maintained between 45 to 55%. The allocation towards gold ETF is to be maintained between 10 to 15%. This mutual fund will also consider investing in REITs, which is Real Estate Investment Trust, and INVIT, which is Infrastructure Investment Trust. There, the investment allocation is 0 to 10% of its asset. For Bank of India Multi-Asset Allocation Fund, the benchmark index is a composite index which will consist of 37.5% Nifty 500 TRI, 50% Nifty Composite Debt Index, and 12.5% domestic prices of gold. The investment for this mutual fund is kept as a minimum of 5,000 rupees with additional investment in 1,000 rupees multiples, and the minimum SIP is kept at 500 rupees with a minimum commitment of 12 months. The second in this category is HSBC Multi-Asset Allocation Fund. As per the presentation and as indicated in their SID, this fund has a different allocation percentage indicated. The allocation strategy for HSBC Multi-Asset Allocation Fund indicated that it will have an equity-related investment at much higher than the BOI Multi-Asset Fund. It's expected to be minimum 65% and maximum 80% invested in equities. For debt and money market securities, the minimum investment is 10% and the maximum is kept to be 25%. For gold and silver ETFs, the minimum is kept as 10% and the maximum is kept as 25%. And in REITs and INVITs, the allocation strategy indicates that it will have a minimum allocation of 0% to a maximum allocation of 10%. Keeping in mind the investment allocation strategy, the benchmark index is also different than BOI Multi-Asset Allocation Fund. Here, the benchmark index will consist of 4 different items. It will consist of 65% S&P BSE 200 index plus 20% Nifty short-term composite index plus 5% on domestic prices of gold and 5% on domestic prices of silver. The investor should note that the benchmark index is significantly different from BOI Multi-Asset Allocation Fund, and hence the performance will also be changing accordingly. HSBC seems to be more aggressive in equities. The investment here is a minimum of 5,000 rupees with additional investment in 1,000 rupees multiples, and the minimum SIP is for 500 rupees with a minimum commitment period of 12 months. The third multi-asset allocation fund is coming from Quantum Mutual Fund. In their NFO presentation and SID, Quantum Mutual Fund indicated its multi-asset allocation strategy. As per the allocation strategy, 35 to 65% allocation will be towards equity, whereas 25 to 55% allocation will be towards debt, and 10 to 20% allocation will be towards gold. As you can see, Quantum Mutual Fund has maintained a very wide variation, which means that they'll be more flexible and probably will have more leeway to allocate their funds in the different asset classes. However, this seems to be less aggressive towards equity in comparison with HSBC. Keeping in mind the investment allocation, the benchmark index is also different for Quantum Mutual Fund. The benchmark index would consist of 40% in Nifty 50 TRI plus 45% for CRISIL short-term bond fund, all index, and 15% domestic prices of gold. As you can see, the benchmark index is based on the equity segment, which is based on Nifty 50 TRI, which means Quantum Mutual Fund may have a bias towards large cap stocks. The investment remains the same with minimum 5,000 rupees with additional investment in 1,000 rupees multiples and a minimum SIP of 500 rupees with a minimum commitment period of 12 months. The fourth multi-asset allocation fund is from Mahindra Manulife Mutual Fund. In their NFO presentation and SID, Mahindra Manulife Mutual Fund indicated its multi-asset allocation strategy. As per the allocation strategy, 35 to 80% allocation will be towards equity, whereas 10 to 55% allocation will be towards debt, 10 to 30% allocation will be towards gold, and 1 to 10% will be towards REITs and NYTs. As you can see, Mahindra Manulife Mutual Fund has maintained an even wider variation from Quantum Mutual Fund. This means that they too will be more flexible and probably will have more leeway to allocate their funds in the different asset classes and deliver higher alpha. Keeping in mind the investment allocation, the benchmark index is also different for Mahindra Manulife Mutual Fund. The benchmark index would consist of 45% in Nifty 50 TRI plus 40% for CRISIL Short Term Bond Fund All Index, 10% domestic prices of gold, and 10% domestic price of silver. As you could see, the benchmark index is based on the equity segment, which is based on Nifty 50 TRI, which means Mahindra Manulife Mutual Fund may have a bias towards large cap stocks. The minimum investment is quite low at 1000 rupees, with additional investment in 1000 rupees multiples and a minimum SIP of 500 rupees with a minimum commitment period of 6 months. One key aspect of Mahindra Manulife Mutual Fund Multi-Asset Allocation Fund is that it falls on risk category of high, unlike the other ones, which are very high as per scheme riskometer. Investors should know that multi-asset allocation fund is a popular fund category. As of now, there are 20 multi-asset allocation funds in India. Out of these, 7 of them are more than 5 years old, 3 of them are more than 3 years old, and 10 of them are less than 3 years old. We'll come up with a new video explaining about the performances of these multi-asset allocation funds. The multi-asset allocation fund falls under high or very high risk category in riskometer. So, all these 4 NFOs as well as their benchmark fall under high or very high risk category. Investors should be aware about this risk category. However, if investors are looking for a long-term appreciation with a bit of hedging to ensure that there is a downside protection, they can go for multi-asset allocation fund. Out of these 4, HSBC may indicate higher volatility due to its high equity percentage. Quantum or Mahindra may see minimum volatility due to their range as well as focus towards large cap. Investors should not consider this as an advice for investment. They should consider their mutual fund distributor or their SEBI registered advisors before making any investment. Investors should also consider reading the offer documents and scheme information documents carefully, as mutual fund investments are subjected to market risk. If you like this video, please don't forget to like it and subscribe to our channel. Also, press the bell icon to be notified of our future uploads.